Vikran certainly has the reasons to do so, because they, in Alex's words, have secured a very large order. I remember this when we marked that stock a few days ago, that their existing order book was 2,400 or 2,500 crores, and they secured a 1,600 crore order, EPC order from Carbon Minus Maharashtra 1. And this project involves developing, ground-mounted solar plant, etc., etc. So before we get the management in, let's get in Anushi for the key details of this order. Anushi.
Hi, good morning, Neeraj. So it's a 1,600 crore of an order win that we are seeing for Vikran Engineering, which has accelerated its order book from that 2,200 crore mark that you were mentioning to 4,000 crore as of September and end as well. Now, coming particularly to this order win, this is from SPV, which what we are looking at, and this is EPC works for development of about 505 megawatt of capacity, and this is for crystalline ground-mounted solar PV technology that they've received this order for, which would have an execution period of around 11 months or so. If you look at the overall order book now, considering these two new order wins that the companies had, that is around the size of 4,000 crore, which shows a revenue visibility of around 18 months or so. In terms of the segment, power T&D continues to be the segment in focus with about 66% of the mix coming for you, then followed by water as well as railway and solar. What would be interesting is the solar sector, wherein they're anticipating high amount of growth going forward. In terms of how the second quarter is, 11% is the growth that we've seen in terms of revenue, while margins have seen about a 600 basis points of an improvement. So this is the overall picture that we are looking at for Vikran Engineering so far.
Thanks a lot for that, Anushi. And Mr. Rakesh Markhetkar, promoter, chairman and managing director of Vikran Engineering, joins in right now to talk about that. Rajesh, thanks so much for joining, and I hope I got the pronunciation of your second name correct. It is Mr. Markhetkar?
You correctly pronounced my second name, but the first name is Rakesh Markhetkar.
I'm so sorry for that. Okay, my bad. Okay, Rakesh, thank you so much for joining in. Let's try and dissect the importance of such a large order for you. And I call it such a large because, if I'm not wrong, your existing order book was 2,400 crores when you got this 1,600 crore order, right? So this is material. How does this alter the execution landscape for Vikran, and what does it do for your business?
Yeah, thank you very much. First of all, good morning, Tamanna and Neeraj, and thanks a lot for inviting us. The important thing is about this new order, we were preparing ourselves for last 18 months. And since we very carefully choose the projects, and see that for last so many months we are preparing and we have quoted, and we as a habit, as an internal discipline, we choose very good profitable project. Since this project, though it is a large in single number, but similar now the trend in the solar and the size what we are targeting is the similar now. So with this current new order book, our size has become 4,200 approximately, the unexecuted order book today. And though we are prepared very well for this order, though it looks very large, but our team sizing and our preparedness, we are already there in the execution mode now. So this is the nature of the projects and nature of our business. So we have targeted approximately 3,500 crores new orders in this financial year. And so far we could able to achieve that in this financial year, approximately that 2,100 crores already we booked. So now the balance we will be closing in this quarter itself. So we prepare for the execution based on this order book, because we have projected the way we have projected our growth and our team sizing, our execution capability development. So this was in line with our strategy.
Markhetkar, very good morning to you. This is Alex. I want to know about the share of the pie, because with the addition of these two orders, couple of orders that you've added over the course of the last few months, couple of months actually, the share of solar is now risen to 50%. And I'm just wondering whether that is likely to stay the case. Is that going to be a dominant share of your order book for the foreseeable future? The orders that you're saying that you will add in the remainder of FY26, will that also be in the solar space?
No, that will be the mix again for whatever the new order book is coming. We have quoted approximately 5,000 crores, the tenders in pipeline. Our winning rate is approximately 20 to 22%. So we are expected to have that another approximately 1,000 crores orders in this quarter. So coming to that, the pie of the order book, see this order, though it is in the solar, but this is also the connectivity. This included connectivity of the project. This is again the laying the transmission line and the distribution line and substation extension, the connectivity. So this is what we saw, though it is on the solar, but it is the mix of our the power T&D and solar, you can say that way. And though the overall in the power, including solar, we will be able to maintain 80%, because with the slowdown in the water and then uncertainty in the water, we very carefully going for the water. So we have switch over to very smartly to the power segment, which is we are more powerful and with our more execution capability in that. So this is that is our kitty. So we are more confident on this.
Mr. Marketkar, are you saying that hydro projects are becoming riskier?
No, we are not in the hydro.
You said water? I thought you saying...
Water segment, like...
Oh, okay, water treatment. Okay. Fair call.
Water segment project, it is not risky, but see what's happening that as a company strategy, we overall look at the profitability and cash flow of the individual projects. That is what our major focus is. With this current order book, the profitability will be able to improve with our for which we are known for. If you see over last years, our EBIT margins are we are maintaining around 16%.
Yeah.
And last year we are given 17.5%. If you see this H1 result also, our that PAT margin has gone up to 133%.
So are you saying, Mr. Marketkar, that the new orders and this large order that you've gotten, 1641 crore, generally the tendency is that if you are competitive, then you tend to shave a little bit of the margin off the top for yourself in order to stay competitive. So you're saying that you've stayed competitive, you will maintain the high value of margins that you had. And the second question is about the execution. 11 months of execution is what is penciled in for this particular project. Can you give us a sense of the booking of the revenue? How will that take place?
Yeah, thank you very much. First of all, giving the confidence on the profitability. We are very sure about the profitability we'll be able to maintain. And in fact, we will be improving slightly. This is one. Second, execution strategy for executing these projects in 11th month. See, this is the small project size of 73 projects. You should say the small location of 73 the locations. And we have split our execution strategy. Some around 25 to 28 teams will be working parallel. This is what the strategy, the way we were doing till last year, 104 locations across the 22 states. Similarly here, now this is the more confined opportunity. We will be executing 73 project sites in one state itself. So here that the probability of our maintaining the execution the speed will remain much better in this case. And then since we are deploying the parallelly a number of teams, and then we are confident to execute in the given timeline. And with this timeline, around 40% of our this order will get executed in this financial year itself.
Okay. Mr. Marketkar, on that note, thank you so much for taking the time. Pleasure speaking with you, and look forward to speaking to you again very soon.
Thank you very much.